Hello everyone, welcome to beautiful Santorini, which is really excellent this time of year, although apparently they tell me that it didn't used to get to this hot. It used to be kind of during August 27 to 33, but for the last 3 years they've had over 40. So anyway, beautiful place. If you have never been, highly recommended you come and check it out. You can see a little bit of it right there. Anyway, gorgeous. Clearly one of the more iconic, stunning islands worth checking out. Today we're going to talk a little bit about a request that I received, which was around the subject of explaining what was going on with the yen recently, the yen carry trade, the decrease in value, etc. And so we're going to talk about that today. So let's dive in. We will try to keep it fairly short. So for those who are not familiar, over the last little bit, this video will be, I don't know, whatever it is, a week or so after this happened. But the Japanese yen ended up strengthening quite a bit, and the stock markets in general tended to do quite poorly. And crypto took a big dump. There was lots of liquidations. There was lots of this sort of stuff. It raised thoughts of the Fed cutting rates more aggressively than expected. The U.S. interest rates, as a result, went down quite a bit, kind of based on sort of the anticipated numbers. Now, of course, the anticipated numbers have been wrong for quite a while. And so there is that whole conversation. But anyway, this is the way the market has been behaving. And so what caused that? Where does it come from? Well, the first thing to understand is that interest rates are not the same in every part of the world. So, for example, for a while in Europe, you had negative interest rates. The U.S. had slightly higher. They've never had negative interest rates. Japan, for a very long time, has had basically zero interest rates. And of course, the U.S. had zero interest rates during COVID and then raised up to the current levels above 5% and did that fairly quickly. So this creates an opportunity, and the opportunity is pretty simple, which is you borrow in the place where it is cheap and then you invest in the place where it is not. So if you can borrow in Japan at zero interest rates and you can invest in the U.S. at 5% interest rates, which is the most basic thing to do, just buying government bonds, you're basically getting free money, right? That's pretty awesome. Warren Buffett famously did a bit of a trade like this kind of during the COVID period where he was borrowing money to buy Japanese stocks. Now, the thing is this, usually the way people do this, which is called the yen carry trade, is that they borrow in yen in Japan. That's in order to borrow at those low interest rates, you can't borrow in another currency, you have to borrow in Japanese yen. And then they would go and they would buy assets that were denominated in another currency, okay? Pretty simple, pretty straightforward. As I said, the most basic of those to buy is US government securities. But you could also buy, for example, stocks. And so there's been a lot of that. There's sort of some famous stuff. This has been going on for quite a long time, but these trades have become really, really big. Now, what started to happen was, a couple things happened sort of simultaneously. One was the jobs report came out in the US indicating possibly more weakness in the economy than some people were anticipating. And based on this, people thought the Fed was more likely to lower rates. At the same time, the Bank of Japan, in an attempt to combat inflation. Inflation is not bad there, but it's been up to about 4%. Decided they were raising rates to 0.25%, so not a major thing. But what that meant was that the affordability on that trade was not so good. Now, a couple things went along with that process. The first thing that went along with that process is that you have to understand that this works fairly well. You're taking some currency risk, right? If you turn around and you buy something in US dollars, but you're borrowing in Japanese yen, then if the yen is weaker than the dollar, you're doing really well. If the yen is stronger than the dollar, you might be doing poorly. And so you needed to account for both of these in terms of what you were actually going to get. So you're like, okay, well, and if you look, it was kind of this deadly cycle because the yen was weakening a lot. Now, part of the reason the yen was weakening was because people were selling yen. When you borrow yen and sell to buy something else, it strengthens the currency you're buying in, and it weakens the yen. So the yen has been doing really, really poorly relative to the US dollar, and so the yen carry trade has paid really, really well over the last while. Okay. Now, at the same time, what has gone on is that the reverse also happens, and so as the reverse happened, what we got to observe was that suddenly a lot of people were concerned about their positions. Right, if you owe in yen, and suddenly the value of the yen is strengthening relative to the dollar, or to whatever you're buying in, but usually it's dollars, as well as if the returns that you're getting are not so good, then you want to turn around and you want to close that trade, okay? So when you start closing that trade, what do you have to do to close the trade? You have to pay off the debt. How do you pay off the debt? It means you have to buy yen, which is strong for the yen, which strengthens the yen, which causes whatever you're selling to weaken. And so you kind of simultaneously saw all these sorts of things happen, where people suddenly were in a situation where the yen, which was weakening, suddenly was strengthening. Therefore, that caused more people to close their yen positions, which meant they had to buy yen, which strengthened the yen, and you get this kind of cycle going on, right? I think I read somewhere that it was estimated the yen carry trade was something like $100 billion, but maybe those are slightly off. But anyway, a reasonably large amount of money that was going into here, largely by major hedge funds, but it can be by all kinds of people. The major hedge funds are able to do this on pretty high leverage, and so that was something that needed to take place for them to kind of tighten all that up. And so, yeah, this is like the first, probably most important thing that went on. The thing that, of course, triggers along with that is that causes the assets that the people are holding to drop. When those assets drop, because they're being sold in order to buy yen, in order to pay back the yen debt, then all of a sudden that encourages people to do the same, and it can liquidate a lot of people. And so this then ends up having a cascading effect across the markets, where suddenly you're in a situation that basically people are concerned about the selling, like there's kind of this panic selling that takes place, algorithms kick in, various different drivers happen, and all of a sudden people are selling basically everything. And the more they sell everything, the more things go down, which causes people who are on margin to get liquidated, which causes cascading liquidations, and so hence you had these pretty major drop in a pretty quick period of time, which is, to some extent recovered now. So anyway, that is the explanation. And so it kind of shows there's a lot of really interesting arbitrage when you look between countries, and the yen carry trade has been a very profitable trade for quite a long time. Big companies are like Citadel and the various big hedge funds have made a lot of money off of it. It is certainly a legitimate strategy, but you have to be aware of the risks on it. And there's safer ways to do it and riskier ways to do it. And so some people, I'm sure, got kind of in a lot of trouble there. But on the other hand, other people have done well and they've closed their positions. And there you go. So it is one of the reasons, by the way, that one can believe that the US dollar tends to be strong is because of the fact that the US dollar has a higher interest rate on things than some of these others. And so on a relative basis, people will buy it versus something else. And they're not doing that with gold or something because gold is a non-productive asset. So anyway, interesting points. I hope it helps. If you have any questions, put them in the comments below. And I will look forward to seeing you on the next video.